Ali Patterson from Fintech Finance. We do the Fintech magazine that's in all your bags, so subscribe and like it and spend lots of money on advertising. It'd be wonderful. We're talking about savings today, and we are joined by Tom and Sarah. We're going to be exploring all the wonderful world of savings. So first things first, got to get you guys to introduce yourselves and what the heck it is that your companies do. So Sarah, let's start with yourself. What is Limitless apart from a great movie?
Hello everyone. So first we came up with the name, then we watched the movie. We have a financial well-being app that is licensed to banks and insurance companies and helps their customers to save and invest money automatically. And on top of that, it uses micro moments to offer them relevant financial and non-financial products. And the product is targeted to mass customer segment. And majority of our users are below 30. So that's the category of, so they fall into a category of people who have no money, according to banks. Yeah.
Excellent. And Tom?
So I'm Tom Arends. I'm the CEO and co-founder of Peaks. Peaks is a Dutch micro savings and investment platform launched 2 years ago, live in the Netherlands and since October also in Germany. So we've built an app that makes investing accessible for everyone, actually saving and investing. And we do it by making the first step to start saving and investing really small. We're a fully licensed full-stack company. And in the last 2 years, we became the most popular investment app in the Netherlands. Now we're expanding abroad.
Excellent. What I absolutely love about conferences as a whole and why we're all here is because you get those wonderful little nuggets of information that you can't get from Googling for days, but you will just come across these almost by random chance, some great little nuggets that you can apply to your own infrastructure, your own business. But it comes at a cost, which is we are in a little bit of a fintech bubble in here. So just to get a little read of the room as you guys, as consumers, raise your hand if you've got a savings account. Raise your hands if you don't. Ah, shit, it's just me. My team are all quite young, all about under the age of 25. I'm relatively certain that, based on the various bank accounts I'm talking, that none of them have got any savings accounts per se. So I want to kind of have a look at how that kind of sort of psychological element of saving comes, because in the first instance, one of the things that I absolutely love as a product that you see, which I suppose is sort of a savings account, is the roundup feature. Tom, what are you doing in that roundup feature at the moment? And what's your viewpoint on its success?
Well, success, I actually agree with you that a lot of people don't have savings or only little savings. That's actually what we see in the Netherlands and also in other European markets. Which actually is a big thing, because if you don't have a lot of savings, you cannot make all the choices you want in life. So there's a big need to do it. Only people have problems starting to save. So you can open a savings account, put money on it, but that's it. But it's much more about the behavioral thing, and we got the roundups for it. So in our app, what we've built is a feature. You can connect your bank account to the app, and every time you make a purchase, let's say you buy a coffee here for €2.60, the app automatically rounds up the amount to €3.40. It's taken out of your bank account and invested in a globally diversified portfolio of ETFs. And in this way, you make like micro savings. So every time you shop, you put a little bit of money aside. You don't notice it. It all goes automatically in the background of your life. And I think interestingly, because a lot of people think, how much do you save in this way? It's actually quite a lot. So what we get from people, what we get back from our customers, it's way more than they think. And as they start doing it, and they're doing it regularly, they really like, I don't know if you do it if you have a savings account, but our customers, they almost log in every single day just to see how much they saved, how much they got, and they see it moving. And it's really a lot of fun. So they're highly engaged. And once you get them doing it, you can help them save more.
Everyone here's got a savings account we established earlier. So in terms of the amount of money that you think people are able to save from that, now I know with Limitless it's a slightly different setup, and you had some facts of the amount that people on average save from using the roundup feature compared to opting in a certain amount.
So actually we don't use a roundup feature. We have algorithms that analyze transactional data of our users and their short-term and long-term goals. So our users set their goals in the app, and these are typically 2 short-term goals and 1 long-term. And what happens is that we understand what's their level of income, whether they have a stable job or they work as contractors. And every day we take a small amount of money from their current account and move it into your savings and investment accounts. So the algorithm determines what's the maximum amount that is safe for them to save and invest. And it adjusts dynamically. So whenever something changes, for example, they get a pay rise, we are able to move more money from their account. They are on holiday, they spend more money, so we're taking less. So we are at the same time that we are helping them to save and invest, we are not. We're also helping them to manage their cash flow, because they are not going to run out of money by the end of the month.
Absolutely. You've all heard the people don't want a mortgage, they want a house. The whole element of, let's actually focus on what they want as a product, as opposed to nobody wants a mortgage for the sake of having a mortgage. They want to have a house. Same with savings. People don't want. I generally don't think people think, I would love to have a nice savings account. They want to have that for a mixture of things. I'd imagine a little bit of peace of mind, and that's what they're after, or a very sort of particular purchase. You mentioned you have little targets. What are some of the things that you think people are saving for, and what's the kind of the psychological focus on that?
Mm-hmm. So typically they would set goals like holidays and electronics, so a new smartphone or a new laptop, and then there would be one long-term goal that they label in different ways. General, like saving for the future, but also saving for children's future, saving for children's education. And we show them, of course, the progress that they are making. We are showing them that they are on track. We give them a lot of encouragement and give them a sense of achievement whenever they make small steps towards building their safety net, 3 to 6 months salaries, and also when they start to invest.
Who here has used any of the, particularly like ASOS is great for it, the buy now, pay later, where you pay it back over installments, but you get the item straight away?
It's just like the reverse.
It is the reverse. It absolutely is the reverse. So with that, I'm definitely in the in the minority in this room.
Yeah, if we're talking about that, recently we were contacted by a company that provides short-term loans, and they wanted to use the same mechanism to help their clients pay off their loans without feeling the pain of paying it off. So the money would actually go into the loans. Of course, it's a different business case, but it's the same mechanism.
Well, do you find in terms of the way that consumers behave, you are competing, especially when it comes to short-term, saving for electronics, saving for holiday, do you find that you are competing directly with lenders as a savings company?
Yeah, for us, I don't really think so. So what we kind of see, because we offer an investment solution, and our customers, the average age is like 34, 70% is under 40. Those people, maybe it's different with savings per se. If you save for a mobile phone, what we see with investments, is most people when they're young, they don't really have clear goals yet. Because their life, maybe they don't even know who they're gonna marry, where they're gonna live, when they're gonna buy a house. So typically their main goal is to have money and to make all their dreams or opportunities that they can do them at some point in time. So with us it's a little bit different. So we kind of see with investing that people really want to invest, have a pot of money for later, and they don't know exactly what they're gonna use it for. So typically when they get kids, they get married, you're gonna live somewhere. At some point in life, your life will be more predictable. That those goals come up.
Yeah, I also don't think we compete with lenders. I think that the customers who would go for a short-term loan are not necessarily the same ones who would download our app and save for these goals.
gonna have to challenge that. So we've got Jeff. Jeff wants to buy. Jeff wants to go on holiday. He could either wait a year of saving, every little bit here, a little bit there, or he can sign up for it, get the holiday, know what it is, and know the amount that he's going to be paying off every month. And that way, he's got the holiday in advance. He's got those memories that he can do. Mm-hmm. Could you not see him being tempted to go on holiday more than save for a year?
Yes, I can see that. So our users, they typically save for holiday in advance. So they even set a date. So they say, I want to go to Thailand in 6 months' time. And we're helping them to get there. And whenever we see that we cannot gather enough money on their savings account for this short-term goal, we are sending them a notification to let them know that they should top up their account.
Maybe to add to it, so we have a lot of young people working in a company, and I know some of them really use those apps that they buy it now and pay later. But what you also typically see, I think most people feel kind of bad when doing that. Yeah? So they're using money they don't have yet. So typically and we have them. It's a minority. Most people first like to save, have the money, and then buy something.
Well, that's one of the I know we were talking about a little bit earlier. I want to look a little bit about some of the misconceptions with money and the way that consumers kind of view savings. What, particularly with, I think, drawing a deep fact here, I think it was certainly in the US, that the amount of millennial savers has now overtaken the amount of Gen Xers. What's the biggest misconception with money that consumers as a whole are facing at the moment, especially when it comes to savings?
So very often we see that users from the mass customer segment, they think that they can't afford to invest. They think that it's complicated, that it requires a lot of money to start, and that it's something that is designed for a guy in his 50s wearing a suit, because that's also how financial institutions position their investment products. And very often they also think that they don't have enough money to start saving. And with us, with the way that we design the product, we are hiding some of their money from them on daily basis in small bits, and we are showing them that actually they can put aside some money monthly, even if it's a small amount on the beginning. It's going to be growing as they get promoted and so on.
Yeah, I think we see the same. So there's also this misconception that millennials, or whatever you like to call them, that they really like to spend and that they don't save, or they don't want to save. I think that's really wrong. So we see a lot of young people using our app, and actually they save quite a lot. So with us, it's about 500-600 euros on average per year. Maybe it doesn't sound like much, but if you do it like for 3 years, you're talking about 2,500, 3,000 euros. And for the average person here in the street, that is a lot of money. And what you also see is that people, once they get started, they really like doing it.
There's got to be a massive opportunity there for the banks, because if you take that figure and then times that by, say, a couple of 100,000 customers, all of a sudden you've got a healthy amount to invest.
Yeah, and very often when we talk to banks, we hear, oh, millennials don't have money, because bank executives think about their children who just graduated and are only starting to work. And when we talk to wealth management, they also say, oh, what am I going to do with, 80 euro per month per customer? And I'm like, yeah, but think about extra 100,000 customers. Then it makes sense. So they still don't really, I don't want to say that they don't get it, but they are pretty conservative and they don't see the opportunities here. That's our experience in most cases.
Yeah, I think also in their business model, they're typically focused on assets under management. So they focus on people with a lot of money. And that's actually where their business is. But what they don't see, that is really crucial to serve as many people as possible. It's first and foremost a good thing to help people save, but those assets will come anyway in time. So that's also what we see in the Netherlands. So we're, I think, larger than most incumbents in less than 2 years in terms of number of users, not in terms of assets. But it's just a matter of time. We'll catch up.
One of the things, and do correct me if I'm wrong, that I think is quite cool about Peaks as an app is, I think it's the same as well with you guys, you can almost choose how risky you want to be with your savings. Do you find that the amount that people are saving has a direct factor on the amount they're risking? So if they save $1 million with you, are they more or less risk averse, or compared to 50p?
No, yeah, no. That's actually what you see. The more money people have, the more risk averse they get, because they achieved a large sum of money and they don't want to lose it. But what we typically see it when people start out small, especially with their spare change. Most people invest pretty risky. Actually, we have 4 portfolios ranging from mild to hot in terms of spiciness, just like in a Thai restaurant. But most people choose hot. And if you would go to a private bank and you would look there, then probably most people would take the most defensive profile, or whatever you call it, or conservative. So with us, it's the other way around, and it's actually also very nice because we're addressing a young audience. And in terms of investing, they should actually invest risky. And as they build up wealth over time and they get older, then they should reduce the risk. And that's actually kind of what we're achieving.
It's similar with us. So we noticed that our users tend to go, so they are more likely to go for a dynamic portfolio in comparison to the users who go to the bank and open an investment account there. So we also see that they go for more risky accounts with us, more risky portfolios.
What does that mean to you guys, and as opposed to, say, one super high net worth individual, you've got lots and lots of people with a couple of hundred, a couple of thousand euros. Do you find that as a whole, there's more demand to be riskier overall, which obviously risk and reward, but again, it could all come crashing down?
No, but yeah, I wouldn't per se say it like this. So we have 4 portfolios, and most, like almost 40% in the most risky portfolio. But let's say the second and third risky one, there's also like 20-30% of customers in them. So it's kind of spread, but most are in the riskiest one.
I think that the beauty of offering a product in a mobile app is that you can choose, like you can slightly direct users into the choice that you think is right for them. So there is a use of colors, of words, of the you can show, yes, basically you can guide a bit your clients into the choice that you think is right for them, which is not always the case when it comes to traditional advisor at a bank.
In the UK, and there's been a lot of memes, a lot of talk about it, of saying recently, I have no idea what a mortgage is, but thank goodness my school taught me what Pythagoras is. There's a lot of that kind of attitude. I really don't think that financial education for the en masse is particularly relevant. I could probably call various people in the phone book and say, people who I know own houses, and say, oh, what is an APR? And they probably wouldn't fully understand it. So how do you tackle that? How do you tackle that en masse financial literacy is not, in my opinion, where it should be? So how do you help with the actual education of people into understanding what the saving products are, and I mean things like you said, the hot things with chilies? That's a great way of explaining it.
I kind of think so. Clearly, it's first and foremost making it really simple. And simple is using it's in the user experience, the design. It's really also in communication, the words you use. So we got copywriters who are like 25, 26. So they speak the language of audience. They don't know that much about investing, so they have like they can explain it in their own way that others also understand. But I also feel like in terms of financial literacy and educating people, like what most banks do, they try to, before you start, give you all the information and get you lectured at the beginning. And what we try to do is to help people start, experience it, and on the way, produce a lot of content and help them better understand what saving and investing is about and how it can help you. A really engaging way, and I think with a lot of examples of people doing it, that really helps them and educates them.
We do a bit of hand holding. We send our users messages like, markets will go up and down, but you just continue investing as you planned. And also we give them option of starting with savings only first, and then once they have enough savings, on their account, then they can start investing slowly. They can start investing small amounts of money and to just slowly learn by doing. Yeah.
So, knock-on effect, what's that going to be if we end up with a lot more people saving? What's the effect that's going to have on people's well-being, both financial and mental? What's the effect it's going to have on people as a whole?
Yeah, so it's proven that that people feel happier when they are taking care of their financial well-being, when they have their safety net built, their 3 to 6 months salary. And that's why we are now looking into offering this product also to corporates, so they can offer it as a financial well-being perk benefit for their employees.
I totally agree with that. I think if you have some money in your savings account or it peaks, that you will feel happier. And when you have money, you can also think about some choices you could not make before. So your opportunities widen in life, and I think that gives a much better feeling. Yes.
You mentioned something about your Uber driver the other day.
Yeah, so I was in Uber in Amsterdam, and the driver said that he left his corporate job because he wanted to have more flexibility, and he left the job like a year before, and he wasn't covered by any pension scheme anymore. So he went to a financial advisor, and he got so many options, and it was so complicated that he just left without making any decision. And then I told him about our tool, and he said, "Oh, if I had something where I could sign up and right away start saving long term for my private pension, then I would just go for it. It's a solution for me." So some people apparently also think about products like this as sort of a new generation of pension products, even though there are no tax incentives here.
With that in mind, what are you guys going to be doing for the rest of the year? How are you going to be expanding? Because I imagine the Netherlands, you've got a fair few people there now. You want to branch out.
Germany, so we're the number one savings investment app in the Netherlands, but it's a very small country. Unfortunately, for a fintech. So we moved to Germany last year, and this year we will move to France and Spain, which is possible nowadays as regulations are harmonized. And we'll add new ways to save. So I think with PSD2, especially now, and people linking their bank accounts for the roundups, so we have a lot of transaction information, and we can use that information to help people save more. Obviously, you can think about subscription management tooling, so where you can cancel your subscriptions, put in the money. We're also talking to energy companies. So let's say if you save on your energy bill, that you automatically put the amount into your account with peaks. All these ways, smarter ways to save and invest. Yeah.
That's so cool with the energy company, because you've got to find new ways of revenue and new ways to connect it all together, and that's so smart.
Yeah, and I also feel so that's also with the younger generation, they want to invest sustainably, and saving, actually not spending, is also a very sustainable way of living. So we should all spend less, so use the other apps less and save more. That's actually generally better for people. So if you can connect to themes related to that, to sustainability, spending less, I think it's a really good thing.
Excellent. Sarah?
For us, we're going to be leveraging on the connections with insurance companies. So we would like to focus a bit more on insurance companies this year, and also to explore more this corporate model of offering Limitless as a financial well-being tool for employees.
Excellent. The last thing I kind of want to put to you is, very briefly, how do you want to see consumers en masse in Europe treating savings? What kind of, one of a better word, what kind of cultural viewpoint would you like to see savings looked at as?
Yeah, I'm Dutch, but the Dutch are really known as savers. So actually our name Peaks, it is derived from a plastic tube. It's called a piekenpijp, and actually the Dutch had it in the past, so they had this plastic tube hanging on the wall, and every time when they went to the market, they would put in their spare guilders. And this is actually where the idea came from, because one of my co-founders, his mom did it. That's the way why he in the 80s could go to the European soccer games of his favorite local football team. So I would like actually for Europe that this maybe the Dutch mentality of saving, if we can just actually how do you say it, export it to other markets and help people just save small amounts regularly and be more happy.
Yeah, and for us, I wish that we'll find more partners who with whom we'll be able to show that investing is really for everyone. And you can be a barista, you can be Uber driver, and build your investments over a long period of time. And you don't need to wear a suit even.
Excellent. Right, I think we've got time. I've lost my timer person. I think we've got time for a couple of questions. Audience, do you have any questions at all?
So actually we are registered in the UK, but we are working with banks in Finland, with Santander Group in one market, but hopefully we'll be expanding to others, with Raiffeisen in Austria, with one bank in the Middle East. So we are at the moment in a couple of countries in Europe and the Middle East. And we have some letters of intent signed in Asia and in the US. So it will be interesting to see how these cooperations are going to develop. Are you asking UK versus the rest of Europe, or? So for us, the key thing, because we are B2B2C, and we actually charge the financial institution, not the end user. So for us, the key is to find a partner that understands how they can make money on this product, that understands that it's not only about savings or only about investing, but about offering solution to a client that will help them to, that will be also analyzing the transactional data to understand micro moments and offer relevant products, relevant financial, non-financial products to the user. So finding a partner who is open enough to collaborate with us and doesn't have the siloed thinking of savings, investments, insurance, and so on, that's the key.
Maybe to answer your question, so I think in Europe there's a huge market. So in our space, there are not so many companies active currently. But what I also see is actually also from the people who are working for us, we're also getting approached sometimes, that in emerging markets, like this micro saving and micro investing would really work well in many emerging markets where people don't have so much money. Like pension schemes are not there yet. It is a great way to start saving and investing and introduce it in those markets. So we're not there yet, but I see clear interest. Of course, you can think of Asia, but the same is true for South America, Africa, all over.
Any last questions from the audience? Oh, yes. Oh, you got a mic, yes.
Can you share your experience in working with banks? Is that easy? Is it
My experience,
difficult?
Is it started?
Some ones?
So working with banks is challenging, especially because the misconceptions that they have. So they typically say people don't save, people don't want to invest, millennials don't have money, and so on. So it really you really need to find someone in the organization who understands what you're offering and who is powerful enough within the organization to get anything done. And that's the main challenge. And consulting companies have teams dedicated to finding one person that can change something in the bank, that can bring a new product. And we are a small startup and we're trying to do it by ourselves. So that's the biggest challenge.
Our experience right now is because we're live in 2 countries and people can actually use the product, and a lot of people work in banks and insurance companies use Peaks and they're very, very satisfied. So we're often used as an example. What we now see, even though we don't have B2B2C propositions yet, but we're getting approached by large insurance companies, banks, but also retailers who see it as a really good savings and loyalty mechanism. So that's also a nice way of doing it. So they're approaching us, and then quite often you're immediately at the right level. Because they all have this challenge: how can we let our younger customers save and invest? Because they don't go to the bank anymore.
Excellent, excellent. Cool, right, you guys are going to be around for the rest of the day, right?
Yes.
Excellent. Can we have a big round of applause, please, for Sarah and Tom? So thank you very much.